Man, what's good, YouTube? Welcome back, DubDigital. Crypto news and macro trends. Got a hot one for you. Mr. J. Powell of the Federal Reserve keeps rates close to zero. Continues buying treasuries. Okay, guys, if you don't know, Federal Reserve actually isn't federal. It's not really affiliated with the government until recently when they kind of quasi-merged with the Treasury. I'm not quite sure anyone really understands the specifics of that one. However, this is the entity who's been very responsible issuing more monetary units or dollars into the money supply, okay? They basically print dollars because ever since 1974, when we got removed from the gold standard, the Fed has had unchecked ability to print and print and print because it hasn't had to back it with anything. Back in the day, they used to have an ounce of gold would print this many dollars because this many, dollars would equal this much gold. But now we don't have that. It's not tied, so there's really no check. That's why we can keep writing bailouts. That's why we can keep just increasing the debt and never pay it back because that's what we've allowed to happen. Okay, the Federal Reserve said Wednesday that it would hold benchmark U.S. interest rates close to zero and continue buying treasury bonds to support the virus devastated economy. All right, rates stay in the range between 0 and 0.25%. Fed says path of the economy will depend significantly on the course of the virus. Well, okay, duh, I could have told you that. Weaker demand and significantly lower oil prices are holding down consumer price inflation. That's a very, very important sentence. I'll come back to that right after this. Purchases of treasury bonds and mortgage-backed securities will continue at least at the current pace to sustain smooth market functioning. Okay, we're done. You got over the boring part, guys. Relax. Basically, I'm going to tell you what this guy said in layman terms. He said, hey, yeah, I know everyone's tripping right now. Everything's bad, but at least we're going to keep rates low. Thank you, Fed. Actually, the reason the economy's hurting so much is because you and I cannot get any yield on our savings. If you're a responsible person and you saved and have some capital, you like to get a return on your capital because there's something called the time value of money. Money is basically like stored labor. So if you let someone hold stored labor, hold capital, use capital, it took you time to accumulate that money, therefore they owe you something for holding your capital. They keep reducing that incentive for people to. If you're a saver and you got rates between 0 and 0.25%, dang, you might as well spend that into some kind of investment, and that's the environment they're trying to get, guys. Because with this whole pandemic going on, no one's spending. They're all at home. They're scared to go out. Doesn't matter how much money is in the economy, how much money you print. If people don't go out and share the money with each other, we keep deflating. If we keep deflating, the stock market comes down. The stock market comes down, there's going to be no retirement for anybody. Government's probably going to get all attacked. It's the path of least resistance if they keep printing money. They keep printing money and they keep rates low. So as they force money out into the economy, out into you and my pockets by giving us stimulus, giving us universal basic income, and keeping rates low, so as you get more and more money, you're not making any money on it. You're getting no interest rate. You're getting no return on your investment. Therefore, you have to shove it in risky places like the stock market, places with crazy yield like crypto. This is the environment that the Fed, this man right here, Jerome Powell, has created for you. It's a game. If you speak economics, the language is growth on. And recently, this dude came out and also said, we have unlimited lending facility support. The Fed's lending facilities pretty much are unlimited. Don't worry, market, we got you. No matter how far the market falls, we got you. Because we have a printing press and we're unlimited in how much dollars we can create, bro. Your stocks went down by 50%, don't worry. We can print it back up 50%. That's what they're saying. So what does this mean? Not financial advice, do your own research, yada, yada, yada. You guys are adults. Okay, but these are my thoughts. What does this mean going forward for the economy when we have low interest rates and continued money printing? This means that they're trying to speed up the velocity of money between retail investors. to get like money moving again back into the economy. And by doing this, there's going to be inflation. Because the recipe for inflation is three things. Increase in money supply, increase in price inflation, and or reduced amount of goods. Okay, we have all three check marks. This one's an and or. We got all three. We got the pandemic keeping things coming over from across the sea. I even heard people getting letters from car dealers asking to buy their cars at extreme elevated prices because they can't get the cars across the sea. Then we have increased not increased price inflation, but increased money supply. They're printing money like it's going out of style, giving everyone stimulus, giving bailouts, and increasing money velocity. That's the one thing they need to spark, and they're going to do it. And you know, when they're ready, this thing is not going to be 0 to 0.25% anymore. It's going to be negative. So not only are you not making money, you're losing money saving. You're losing money in your bank account. This is how you can economically engineer responses from your population. It's just social engineering, man. Social economic engineering. People think with psychology. It's self-preservation. If you can understand the way people think, you can design the economy in ways that work in incentives to organize the society the way you want. They want you to spend. They want the stock market to go up more. They do this. They do that. It's crazy, guys. That's all I got on this one. But you need to start paying attention as serious investors. Monetary policy or fiscal policy. Maybe it's fiscal policy. People use the terms interchangeably, but I think fiscal is federal, is like the Federal Reserve. Monetary is like Treasury and all that. Not sure. They tell you how the rules are going to work in the future. They tell you that the rules change. They control the rules. If you don't know how the rules have changed, and sometimes they do, how can you predict what your asset's going to do? How can you predict what the environment might look like in a year or two? How can you know if it's going to be a good time to switch out of assets into starting a business for cash flow? You don't. And if you start learning these things and putting them together, investing becomes less risky. It becomes less of a guessing game and more one of confidence, because you know this has happened. Typically when this happens, that must happen. If that doesn't happen, were the rules changed? What's the significance of this rule change? That's how you got to think, guys. Maybe I'm a weirdo. I think this stuff's super interesting. You could even use these policies to, if you understand how they work, you can use them to your advantage to make money. You can put yourself in a position where the money just flows onto you because you had a better understanding of how the market forces work. That's all that is, guys. All right, quick one here. I'm DubDigital. Crypto news, macro trends. Give me a like, comment, subscribe. Peace.